All right. Hello, everyone. This is Guillaume Ho, yeah, with Amy Caldoun. We're from the, yes, Panoptic Research Team. Sorry, yeah, let me stop that music, but yes. Um, we're the Panoptic Research Team. This is Beyond the Grid. So, this is the research content that we're producing. We show this every week on Tuesdays, where we go over a strategy, some concept, or some level of high level research that we're doing that helps the listeners here to find some actionable items and what some strategies to use when they are facing with different market conditions. I'm here with Amy Caldoun. Yeah, first of all, how are you doing today, Amy? Oh, I think, sorry, you're muted. Just a second. Yeah, you go ahead.
I'm very well, thank you. I hope it's the same for you. I mean, it's spring, so everything is blossoming right now,
I
and
know,
I'm
so,
so
and
happy.
you're
I love this season. Sorry.
same as me, but I'm stuck in Boston, so it's still very cold, but you're in a very nice place
Yeah,
now, right?
I'm in Italy, guys. For those who don't know, so I have family here, so I'm very happy to come back from Paris. And so yeah, everything has been going well, and I'm very excited about this presentation.
Oh yeah, you were at the Paris Blockchain Week too last week.
Oh yeah, yeah. That was last week. So it was in the Louvre, in the museum,
No,
and we
Mona
met a
Lisa
lot of,
gave a
yeah,
talk.
it was really nice. And like the slide events were even better because like moving from one rooftop to a nice cafe, so like, it was like very, I felt like I don't know, it was really good. Food was
So
nice
yeah, I'm
also.
forgetting FOMO. I'm sure if you visiting Paris is always fun, but if you live there, again, it's not every day that you go and hang out on a rooftop. So
Yeah,
this
I
is
mean,
great.
especially the Louvre, because I used to go there when I was, because there it's free for people under 26. And yeah, so I used to go, but now that I'm old, it was nice to go like
I mean,
with
it's
the with
old
my,
art. It never changes. It's the same thing for the
yeah,
past
that's
400
that
years.
for sure.
Kidding. Uh, Anyways, this is one that I was looking forward to, and just to I'll set up the topic, I guess. But yeah, Amy will present. But the past year was definitely a bearish environment for ETH's price. It's actually unclear how well we would capitalize on this if you're just trading buy and hold. I mean, market going down, there's not much you can do. You can borrow or short maybe the asset on Aave if you're really redirectional. You can use perps and do it on leverage, but it's very binary. You benefit if it goes down, if it goes up, you lose. Uh, when you use only options or these static deltas, it's like a perp or shorting. It's always unclear if you can be successful. What I like about options is that there's many options. There's many ways to capitalize on the market move.
Mm,
And if we were to return back the clock, I think 14 months, predicting that the price would go down, what's the best strategy? Selling call options or buying put options? And again, those are both bearish. They should make money both cases if the price goes down. But here we do a back test to actually see this. So I'll hand it off to Amy. But yes, I'm actually excited. I don't even know the results myself. But yeah, what's the best in bearish
yes.
environments? Selling calls or buying puts?
All right. Okay, so hey everyone, my name is Amy. So I'm a quant researcher at Panoptic, and today I'm going to walk you through a competitive analysis of two core bearish option strategies available on our protocol. So the first is the short call, and the second is the long puts, both deployed on the WETH USDC 30 BPS pool. And so this is like the first part of a larger series focused on building systematic strategies with pan options. So the next should be about the inverse strategy. In other words, short put and long calls, which are bullish strategies. And the primary goal of this presentation is to see how these various strategies like react to a 14 months ETH market with pan options. So as we can see in the slide,
Oh,
the price is very very volatile. We can identify like different price patterns, and like it goes, sometimes it goes up, sometimes it goes very very much down. And here we want to experiment with this bearish strategy, so we're not including any others, just these two, and see if they are able to capture some kind of value in this like cold and hot
yeah,
ETH
I don't mean
market.
to cut you off,
And
but
also
I,
this
I was also under recency bias. I thought it was going to go with down, but it actually is almost the starting point of a year and a half ago, which is about 2K. Now, definitely the past few weeks has been down, but so this is interesting. It's almost like sideways.
Yeah,
So yes, even more
exactly.
interesting. It's not just going to make maybe one of them will lose. So yeah, very cool.
Yeah, that what makes it interesting because obviously we could say, oh, it works because it's already bearish, or it works because it's already bullish. So here it's interesting because it's both. So we have a period that is both bearish and bullish, and we want to see how these two bearish strategies just behave, and if we can get some kind of value and do some comparisons and see which one is better, and also for which reasons. So yeah. So before diving into the strategies, we can just take a moment to recall what just Panoption, what makes Panoption unique. So unlike traditional options, Panoption perpetual, so there's no expiration date and exists within the Uniswap V3 concentrated liquidity framework. So we don't have any expiry date, and options accumulates what we call streamia. So it's a premium that flows over as long as the option remains in range, and it stops from flowing when it is out of range. So that's like just a fundamental difference that we want to highlight because it's going to also impact the payoffs and the returns, etc. And for the strategies, so on the short call, so short call is constructed by selling a call. So you are expecting the price of the underlier, in our case, it's the ETH, to stay flat or go down. So in other words, you profit if the price stays flat or drops. You earn streaming as long as the price stays below your range, and the price rises above the strike. Your value, your position loses value. And what's really important here is that the profit is capped, so it's limited to the strike, and your position loses value. Whereas, like in TradFi, the upside risk is unlimited. So, risk management is very, very important. As we can see in the page, that we have a huge curve, and yeah, so that's like that requires a little bit of more risk management. And moving to the long, there's I
Yeah,
think
long
we
put. Sorry. Yes.
yeah, okay. Okay, so this one was first. So the long put, so this is when you want, so it's just buying a put option, and so you pay a premium over time, and it's designed also to profit from ETH price drops. Here, the maximum loss is limited to the premium paid, which is very interesting compared to the previous strategy. Whereas the maximum profit is substantial, especially like if ETH collapses to zero. But that obviously we don't want to don't want it to happen because otherwise it's going to be a problem, generally speaking, in the market. So yeah, it kind of behaves a bit like, I like to say, like an insurance policy. So it pays off in bear markets, and it costs you when nothing happens. So like it's like an insurance basically. So this is a way of, if you want to buy it, you can just think of it like an insurance. Oh, I have my second insurance, and it's called long put,
It's like
uh,
buying
for
flood
instance.
insurance. You pay every year for flood insurance.
Yeah,
You're thankful you
exactly.
never get to exercise that insurance right. But if it does flood, then you're covered. So that's a little bit. You're not losing
Yeah,
money if you think
for
of it in
sure.
terms
And
of hedging. It's just buying some protection type of thing.
yeah, and usually they're less expensive
Very.
than the real one, so makes it even more interesting. And so now moving to our results, and before like commenting on any the graphs, we can. So the first thing I want to say that we back tested both strategies using data from January 2024 to February 2025. So it's 14 months period on the WETH USDC 30 BPS pool. So some key points is that we used 40 delta, so OTM options, and we tested two rolling regimes, so weekly and monthly. So why rolling matters? Because options drift simply. So an OTM, out the money option today, could be at the money next week. So rolling helps kind of realign the position with market conditions. So for those who don't know what rolling is, just closing and reopening the same position simultaneously. And so you can find out more about actually this data and the implementation in our latest research article that was published yesterday, actually. We also have the code of the backtesting available to the public. So here in Panoptic, we want to be like as transparent as possible, and also it's always nice to like to have some people trying the backtester or like our codes and getting their own results and just like start a conversation. So that's always nice. And yeah, so let's look at what we found. I don't know, if, Guillaume, if you had time to like just go around.
No,
Um,
this is brand new for
so
me, but yeah, these charts will probably find like this like show them quite often for different strategies. But yeah, it's worth to maybe show what each line means, and yeah, but yeah, this is a bit surprising
yes,
to me. But yeah, this is very good result effort.
yeah, so we can see that the long put with monthly rolling was the only strategy that ended up positive over the full period and with more than plus 20% net returns. So this is very interesting. So that's the only strategy that kind of captured the volatility very well. And so it's kind of surprising because as we saw in our graph of the ETH prices, so it was very, very volatile during those 14 months. But for the short call, we can just, one important thing is that weekly rolling helped minimize the negative returns, as we can see. So here we're moving from, so for the short call, we're moving from, where is it? To minus 11 here.
Yes, the
Oh,
pink line I
plus,
think is the total return. So this is what you would get at the end of your back test in your wallet. But yes, the blue is the premium and the green is the actual payoff. But yeah,
yeah, yeah. So the weekly, like we moved from minus 37 to minus 11%.
yeah. So again, this is also like the
Interesting.
put. You have a premium that's always going down because you have this kind of you have to pay for it, and at the same time in calls you get paid a fixed amount. And the
Yeah,
rebalancing is where you kind
yeah.
of lose because the you have to redeploy it. Then if it's slightly wrong, you kind of accumulate these losses. But yeah,
And also for the monthly rebalancing, for so the roll, it's rolling. I just kept to the, because guys, it takes a lot of time to backtest this. So we replaced rebalancing by rolling, just seemed more appropriate. So yeah, when we say rebalancing, it's the same as we rolling in our case. So yeah, when we look at long put as well, so for the monthly we ended at plus 20%, whereas for weekly it's minus 3%. So monthly rolling seem more interesting for long put, whereas weekly is more interesting for short call. So that's actually the same results that we also have in traditional finance. So it's the same thing. So that's what traders do as well in TradFi. So that also means, okay, so we still have the same results that we already have in TradFi, and now with the pan options as well, so which makes it even more interesting. So it's not just, even though we changed the ecosystem, moving from centralized exchanges, order books, and all of that thing to um, for liquidity fragmentation and just like a liquidity pool, and we have a certain range. Even moving from that system to the other one, we still have the same results when we do our backtesting for options, which makes it very, very interesting.
yeah, and I think the reason because the market was up and down and not purely down. That's why you may have some losses on the short call. Remember, you have this
Yeah.
unlimited loss on the upside, and definitely something we see maybe in the monthly rebalancing. You have one or two big losses that can wipe out a lot of your gains, and this is just the nature. So, but still, you get paid quite a bit, 50% of your P&L back in premium, but fortunately, you lose a bit more. Actually, I'm interested. It's interesting that both short, like the weekly and the monthly, gives you the same premium return, about 51 or
Yes.
49%. Whereas the risks are a bit higher when you rebalance monthly, which is interesting as well. But yeah, so it tells you about like There might be an optimum that we study later on. But yes, the premium, as long as you're in range, you get paid for that risk, which is kind of good. But yeah,
Exactly. So it
it's
doesn't,
these
yeah, it
side,
doesn't
like
change
the
much for.
picking pennies in front of a steamroller. That's kind of the way
Yeah,
that
yeah, that's exactly what I wrote in the article. It's the same.
exactly.
It's the same expression.
But yeah, very very cool.
Exactly. Yeah. So here we wanted to zoom in a bit, So we have the overall returns, payoff, and premium. So we wanted to see like what's going on a weekly and monthly basis. So it's the same thing. We have premia and payoff and returns, different colors, and we can see like for long put strategy. So for the monthly rolling returns alternate between gains and losses about like 50% of the time. We have it performs best during like sharp ETH price drops, obviously as we expect it to. So on March, August, and February. And we have strong gains during bearish periods. So we have large upside in down markets and small losses in up markets. And for the weekly rolling, so losses are consistently small, so never inferior to. So it's always inferior to -5%, which is interesting. And yeah, there's like a kind of a high responsiveness to short-term price movements. And as for the short call, so for the monthly roll-in, we have like steady, modest monthly gains, so between 2 to 4% on average. So major drawdowns in February, May, November 2024. So losses close to 40%, -40%. As for the weekly rolling, we can see like drawdowns exceeding -15%, and we have a more stable premier collection. So yeah, it's just like Guillaume said, like we changed kind of the picking up pennies in front of a steamroller profile, basically. But it's very interesting to see what's going on the weekly and monthly basis, because sometimes you also want to trade based on that, and you just don't want to open a position and let it there. So if people, if there are traders more, they trade like the daily traders that I would call them, so or weekly traders. So it's interesting to see these graphs. We can collect even more premium. We can collect and have a slightly like a higher net returns when you just do this on a weekly and monthly
Yeah,
basis.
and then this is
So yeah, what do you
yeah,
think?
this is
Yeah.
the again, this the stuff we've been talking about with Rosalie in the trading show, or kind of more broadly how you should consider selling options. If you look at the lower left, which is calls, you have most weeks small wins. You accumulate these small wins. Unfortunately, you can get wiped out on 1 week and lose a lot. So this is high probability of success, smaller returns per trade, but then you're consistent. And these large losses, in this case, it's the price going up very high. You are exposed with unlimited losses, something that you don't see quite often by buying puts. But the key point is that now that we see consistent returns, for instance, for months at a time, you can now protect your losses if you just use naked calls, which are actually pretty risky even in TradFi. Then you can expect a large
Yeah.
loss. But if you have a spread, or you are limiting your max loss by buying a call option, you can imagine that you would earn a tiny bit less every week, but then at the same time, you would be not subjected to that big of a loss if you're wrong directionally. So there's like a trade off, of course, but one of the obvious things to do is you don't want to get wiped out and lose 40% in a single month. Then you buy protection to some extent. And this is what beginners should do as well. Trading naked calls is not something that the beginner should do, but the spreads, having something that's a bit more delta neutral or at least offset, can help as well. But yeah, this is actually fantastic data because
Yeah.
it validates some of the ways to trade that we've been advocating, which is secure on a larger number of small wins, and risk management and making sure you don't lose too much is kind of the other side of it. But yeah, very
Exactly.
cool.
Exactly.
And you see the weekly max loss is 20%, the monthly max loss is 40%. So it is also beneficial to be a bit more active and not necessarily kind of let
Yeah.
these losses ride. And you can imagine that if you are managing well, you could even catch these losses a bit earlier and kind of have 10 or less. So yeah,
Yeah, for
very, very
sure.
cool.
Yeah,
Oh,
perfect.
and yeah,
So I put a little conclusion on the table. So yeah, so for both strategies, so they're both bearish, a little bit neutral for the short call. So the max loss, as we saw, it's potentially unlimited for short call, whereas for long put is limited to the premium that is paid. Whereas the max gain, it's for the short call is the premium, and as we observed, it was 5% in our backtesting, and as for the long put, it is substantially high. It was 20% the observed in our backtest, and theoretically, if the price goes to zero, then you get the max gain on the long put. Again, we are not we don't want that, obviously. So yeah, and as for the optimal rolling frequency, so for the short call, it's preferable to do it on a weekly basis, whereas for the long put, it's better to do it on a monthly basis. And yeah, so each strategy has its own use case, obviously, and it's all about, like at the end, it's all about aligning with your market view and also like your risk tolerance.
and yeah,
Um,
and this is kind of it's weird because you start almost at the same point that you end up, and then depending on the strategy, you could benefit, you could lose, but at least you're doing something that helps you kind of evaluate that directional. You can be long term bullish, but then short term bearish, and it's only with options that you can do this. I'm also personally inclined to sell options a bit more, but definitely selling calls is for the those that can stomach it. But yes, call spreads or even buying a put option is still fine for risk management and insurance policy. But yeah, it seems like it paid
yeah,
off at the
yeah,
end of the day.
I
Long puts.
prefer long puts. I like the idea that price can like during political periods. It's interesting,
Yeah,
like to so
definitely,
I
and I
don't
think
know.
the this is what TradFi has been doing for the past decades. It's not about making money when it's going bad. It's rather losing less, or at least managing losses. And this
Yeah,
is
for
kind of the
sure.
best way to do this when you use options. And I think might be one last. Okay, yeah.
Yeah. So yeah, just to wrap this up with the future work, I always like to highlight that section. So for our next research steps, you could include, like as I said before, the next time it would be about the bullish strategies over the same period and see if it's gonna capture just as well as these bearish ones, or maybe better, or maybe worse. So that's stay tuned for that. And yeah, well, something else that we could do is just compare strategies across other type of assets beyond ETH. So for instance, BTC or any other token. We can also test different deltas. Here I only tested the 40 deltas. We can add different legs, so make it a little bit more advanced, and maybe testing even other rolling frequencies. So if you want to do a back test for like with the bigger like with the longer periods, so for instance, like with 3 4 years, we can do it on a yearly basis or on a daily basis if you want to be a little bit more short term. And yeah, so what does that mean at the end? So I would just say that Panoptic gives us like a cutting edge technology and a new new lens for thinking like about options, not just as linear payoffs, but also like as dynamic, capital efficient trading tools built directly on DeFi infrastructure, and of course understanding the differences between the strategies and how they behave in volatile conditions is the key at the end, like if you want to build a more resilient system in the whole space of DeFi. And yeah, so thank you for your presence, and I hope to talk to you soon. If you have any questions on Twitter, or even you can comment on our latest article research, and I'd be happy to answer those and start conversation. We can even, I don't know, if there's a company following us right now, we can do some research collaboration. I mean, we're always keen on doing that. So yeah.
Amazing. Thanks very much, Amy. This is great. So yeah, the this is something that we'll try to do a bit more often, but some people may have a bearish outlook. What do you do? And in that case, it seems like buying put options might be in some scenarios better than selling calls. The risks and there's especially the losses could eat you away. But yeah, this is great. So again, this is going to be part of the common knowledge and common research knowledge that we're building here at Panoptics. That even
Hopefully,
these
yes.
trade options, not even Panoptic, but also like could be Robinhood, who would buy calls, sell puts. But yeah, this is great. All right, so that's it for today. This was a fantastic piece. Thanks very much, Amy.
Thank
Uh,
you.
and yeah, we'll. I think you'll be back with these research. We'll see Nathan next week. But overall, this was great. And any last word, maybe before we adjourn the meeting, or it's
Uh, for me,
yes. I never know
any
how to
last
these
word?
those trees. I don't know. Bullish
Guys,
or
be
bearish? Are you
careful.
bullish or bearish for the next week? And let's say if
Oof,
we were to do this.
I don't like that question because some like people would maybe listen to my advice and do something. I would say the only thing that I would say, be careful when you trade.
Yes.
Always have some risk management in there. Always do some. Don't use leverage, guys. Be careful on that.
I
Be
mean,
careful
to
on
some
the
extent,
leverage.
the we options are inherently leveraged, and
Yeah,
don't use it irresponsibly. And
exactly.
you can create something that's defined risk, and then you know the max loss as opposed to infinite loss.
Exactly. Always put your max loss. For sure, that's for sure. And also, like do your own research. That's like something. Like we obviously there's so many content, great content. We're also trying to produce some like good knowledge around democratizing options and just like making the whole concept simple and just like very much accessible to anyone who wants to jump into this whole field. But obviously, I think someone needs to be very careful and do their own research and get their own ideas of the market because there's so many ideas out there. So it's very important to like have your own and just be convinced in your own terms rather than just influence. So we're here to like kind of give you a direction, but you have to like shape it yourself, obviously. But yeah,
All
but
right.
also like, options for sure they're great for like both markets, whereas bullish and bearish. So that's what makes them even more interesting than like spot trading or any type of trading, generally speaking. So yeah,
And you can express your opinion pretty kind of clearly with options. It's again the strategic advantage of options is great, but yes, maybe you may be neutral then, bullish bearish on ETH.
um,
Uh,
so I'm bullish. Honestly, I'm very
okay.
optimistic. I feel I'm a bit optimistic. Um, Also, like from what I've seen in the Paris Blockchain Week, there's a lot of innovation going on, a lot of great ideas, a lot of good protocols. So people are raising money. People, and there's a lot of investors interested in different type of protocols, like different innovations in the DeFi infrastructure. So yeah, there's a lot of. I think I'm pretty much optimistic, but obviously the crypto space is very correlated to TradFi, to anything related to political views. But all in all, I think crypto is more about the technology than just than politics. So even if it's
Yes.
influenced by that for some reason,
That's right. Decentralization, censorship resistance can survive anything. So yeah,
yeah,
maybe leaps selling huge, large, like wide puts, maybe kind of the best bet for you. But yeah, anyways, thanks a lot.
exactly.
We're hitting the 30 minutes, but this is great. Thanks a lot, and then we'll see everyone on tomorrow for the Stop Losing, Start Trading show, and also options hours. And yeah, otherwise, I'll see you in a couple